All right. Ladies and gentlemen, how are we doing? Willie, you made it. We can't hear you, man.
So cheers, everybody.
Cheers, man. Happy Wednesday. It's a good day. I think William froze. Either that or he can hold really, really still for a long period of time. By the way, ladies and gentlemen, William is probably one of the smartest guys that I have ever met. God awful when it comes to technology, like just really bad, and that's good because when you have somebody working on your finances, you just want like all of their brain to just be focused on that. So a real smart guy, but technology is not really his forte. It's okay. He'll be back with us here soon. Yeah, he's gone, but he'll come back.
Yeah, that is gone.
Yeah, he'll be back. So, ladies and gentlemen, welcome to episode 2 of the Cheers to Wealth podcast, where you come for the finances and you stay for Dwight's boyish good looks. And today, we're going to talk about the 5 dumbest things that people do when they start a business, which there's probably a lot more than 5, but we chose 5, and we might deviate from that 5 a little bit. But at least these are some of the things that we see that can really slow you down and really keep your momentum from accelerating when you want to start a business. But before we get into that, and before I turn it over to Dwight, understand that starting a business is literally the number one best possible strategy that you can implement to build your wealth and then also to save money in taxes. Really, that's the first place that you need to start. And then the goal there with building your business, and that's really the way I got myself out of being an employee. I started a business. I worked that business. Once I got to a point where that business was making me the same amount of income that I made as an employee, I quit being an employee, and then I focused full-time on my business. And really, that's the goal here for us, because the best tax strategies out there are for business owners. I will tell you, if you are an employee for a company, it's always really difficult to figure out ways for us to save you money in taxes. And so that's the whole purpose of this podcast, to help you save money in taxes and to help you build wealth. And I think William is back. Let me see. Willie, can you hear me? I can see you, and I can see you moving your lips. I just can't hear you. But you look dope, though. It looks like you took a shower. It's great. We appreciate that very much.
Looks like he even shaved for tonight.
I think he did.
Yeah.
I think this is the best combed I've ever seen him. It's great.
He knew that we were going to have a really large audience tonight.
Very large. Yeah.
Trying to look good.
I always look like a hip hop R&B artist, and you guys actually look like financial professionals, which is good. Okay. Well, while we wait for William to kind of get his audio there up and running. Dwight, you want to go ahead and kick it off, man?
Yeah, you can go ahead and do the first one.
Yeah. Okay. So the first dumb thing that people do when they start a business is they focus on all of the technicalities. So basically what happens there is they focus on the things that don't make you money. Let me go over a couple of those. Starting an LLC. Now, there are certain businesses where starting an LLC is important. So let's say the business that you're going to get yourself into is driving a rig. There's a lot of liability that comes with driving a rig. I mean, you can go have an accident and somebody could sue you. You could kill someone because you're out on the road all the time. Stuff like that may require for you to get an LLC from the very beginning. But in general, most businesses, like if you're out there selling, I don't know, let's say cosmetics or whatever, you really don't need an LLC. Your liability exposure is very limited. So all of that jargon of starting an LLC or creating a corporation, all that stuff, guys, that's secondary. So let me ask you this question, Dwight, because you brought up this concept. What is the first and primary thing that you need to focus on when you start a business?
It's all about the money, right? You've got to make money. I mean, without money, there is no business. So you've got to have income technically to be in business. And if you're starting a business and you've got these expenses, they're really not even deductible up to, there's some caps up to like $5,000 of startup costs that you can deduct until you have revenue. So you've got to have money technically to be in business. So you've got to make money and don't overcomplicate things getting your business set up. With entities and different structures and fancy ways to set things up. Because it's always interesting when people have very limited assets, and then they go and set up this complex structure to hide things and keep things secret, so nobody can, if they were to get sued, nobody could find their assets when they don't have anything to hide to begin with. So just you gotta focus on making money, making sales, and the rest will take care of itself at that point.
Well, the one thing that I can add to that is there is no business problem that revenue cannot solve. No business problem that revenue cannot solve. If you have money, if your business is making money, money solves all problems. Businesses fail not because you lack the right systems and processes, not because you lack the proper software, not because your desk is clean, not because you have the right assistant. Businesses fail because you don't produce revenue fast enough to sustain your business. That's why a business fails. So when somebody comes to me, and I've had a lot of people send me inboxes before, be like, hey man, I want to start a business and I want to create an LLC and I want to do all this cool stuff. And I asked, okay, well, what's the business? And they tell me what the business is. And I said, okay, how many sales have you made? They're like, well, I haven't made any sales yet. Then what the hell are you worrying about creating a freaking LLC? You haven't made any money yet. And that's really what before I even considered creating anything, the first thing I said was, dude, let me make some freaking money. And Dwight, you're very in touch with the business that we usually have come in. A lot of the business owners that come into our organization, they're making excess of $1 million, haven't even freaking created one LLC, which that is a problem, by the way. But I'm just saying, you can make a hell of a lot of money with your business and never create an LLC.
That's 100% right. And we see it to where people have a very basic setup with their businesses to very complex stuff, and it's almost so complex it's overwhelming for the business owner to even manage. And you don't want to go to that extreme either. So I think that's what's important. Find somebody that can help you get everything taken care of up front, because a lot of business owners get into business because they're good at what they do. They're not good running businesses. For example, a plumber or HVAC, they're good at doing that type of work, an electrician. But then when it comes to actually running a business, doing bookkeeping, they're not good at that type of stuff. And so it's important, to make sure that you're, not causing further stress by overcomplicating the way you were to set up your business from the beginning.
Just focus on the sales, focus on the making money. You focus on the making money, then you'll have more than enough resources to do everything else later. That has to be priority number one, which leads us to number two. So what's the second dumbest thing that people do when starting a business?
Well, you know me. I hate to say dumb, but it's just not very smart. Is they don't set up a separate bank account, and they're running all their transactions for the business through their personal account. And we had one of our last year had 4,700 transactions through his personal account. and then came to us at the end of the wanting to sort through it, try to decide. So it's not just people, starting out on the, just starting a business. It's people that have been in business that don't know the importance of keeping separate bank accounts. That's technically commingling, and that's obviously wrong to do that. So, some business owners are starting out, if they're doing it under their social or they haven't set up an EIN or an LLC, a bank may not let them take out a bank account, a business bank account. So just set up a second account under your social. Just keep things separate that way. It'll be perfectly fine.
Well, and that really allows us to track expenses too, because remember, but part of what gets people in trouble with the IRS is like Dwight said, commingling your personal expenses with your business expenses. You definitely want to keep those separate, and it's a lot easier to do that from the very beginning. And like Dwight said, even if you don't create an LLC, it doesn't freaking matter. Just go open a second bank account. The second bank account is under your personal name. It's a personal account, but that's the bank account that you utilize 100% for your business. You get a second credit card, and that credit card, you use it 100% for your business. So there's a term called sole proprietor. When you are running a business, not through an LLC or not through a corporation, you're just running it through yourself as an individual, you are called a sole proprietor. Basically, you're self-employed. There's absolutely nothing wrong with that. And a lot of the times people think that by creating an LLC, you're going to get all of these tax advantages. An LLC has absolutely nothing to do with tax advantages. The only thing an LLC will ever do for you is limit your liability exposure. Hence, LLC, limited liability company. That's all it does. It does nothing for taxation. The taxation problem comes later, but until your business is making like excess of $100,000 a year, net means like what you have left over after expenses, you don't have a tax problem. So let's focus on making money first. You start making a little bit of money, then we can move on to other things. But having that second bank account, having that second credit card, extremely important. What's the next one, dude?
The next one after the bank account is not maintaining the books, not doing the record keeping throughout the year. And, if you're going to run a successful business, you need to know at all times the financials. And a lot of people try to manage their business out of their bank account, and they'll just check their bank account in the morning and they've got X amount of dollars sitting there. So they think they can go out and spend money at that point. But they don't think about future expenses that are planned. And they're just, there's no way to forecast when you're not keeping up with a profit and loss statement. Plus, it's just got to be a big pain if you wait till December and you started the business in January, or right before you go to file taxes and you've got your big shoebox, and to sit there and have to add all that crap up, that's just terrible. And I give people a hard time. I guess it's because I know what it takes to stay organized, and I can pull you up an up-to-date P&L for all my businesses right now.
What's a P&L, Dwight?
A profit and loss statement. So it shows your income, and then it minuses out your expenses, and after that you have your net income, your net profit. So it's a profit and loss. Hopefully you have a profit. You could have a net loss if your expenses exceed your income, but hopefully it's a profit. And just to relieve the burdensome of being a business owner, if you're not good at bookkeeping, and if you don't want to keep up with your records, at least on a weekly basis, then I recommend outsourcing that. Find somebody who is a bookkeeper that can keep your financials in order, so you can make educated decisions about your business throughout the year. Maybe there's some investments that you want to do with the capital that your business is kicking off, and you think you've got the money because you got the money in your bank account, but you forget, that you've got 6 more months of expenses if no other revenue comes in. So just keeping up with your financials is key. And two, that's the foundation of tax planning, and reducing your taxes is making sure that you're counting every single expense that you've incurred over the year. And if you've got some receipts that have fallen through, your seat in your truck, and you forget to count those, then that's just extra money that you've spent in taxes. And I don't like that. I like all of us to keep as much money in our pocket as we can.
I agree with you 100%. So when do you feel it's appropriate to either hire a bookkeeper or to outsource that? After you make how much revenue do you recommend something like that?
I think, well, personally, I don't think there is a certain revenue level that you need to hit. If it's something that you're not good at, and it's something that's going to cause you anxiety, and you're just going to dread having to sit down and take the time to do it, find somebody that can do it. You can find some people that don't charge a whole lot that still know what they're doing, that can help you. But typically, about the 100,000, once you hit the 6-figure mark, I think it's worth seeking out a professional that knows what they're doing. At $1 million, I recommend probably finding somebody that can do it internally for you. That would actually be a hired member of your staff. And that way, they're keeping up with everything. And at that point, handling your accounts payable, your accounts receivable, and just taking a lot of stuff off your plate as the business owner.
Very good. And we very often see when we're trying to do like higher level tax strategies, like we'll have business owners that come in and they're making like $4 or $5 million a year, and we're really trying to figure out where their finances are at. The hardest thing for us to figure out is where we are in terms of the books, because the books tell us everything. Basically, your bookkeeping, you're keeping up with, like Dwight said, your profit and loss statements. Like if we don't know exactly where your company is at in terms of profitability and expenses, and it's very difficult for us to implement strategies because we really don't know where we are in terms of income. So that's very, very important. But we circle back to the original case in point, and I want to continue to harp on this as we kind of go through the other dumb things. I know Dwight doesn't like to say dumb. I wanted to call it the 5 stupidest thing, but Dwight said that was too much. I want to make sure that you guys understand that there's nothing senior to making money in your business, and for a lot of you guys that work W-2 jobs, and you could have a great W-2 job. You can make $100, $125, $150,000 a year. That's freaking awesome. As a W-2 wage earner, which means you work for a company or a corporation, you're always going to get screwed with taxes. Always. There's very little to no tax strategies available to you until you choose to start a business. That's why I always make the recommendation to all business owners to start a business while you are still actively employed somewhere else and have a steady stream of revenue. Because if not, what's going to happen, and this happens very, very often, especially in my field, in the financial field, for whatever reason, people are not making sales, or they're not getting new business when they're actively employed with a company and making money. And they just think that by quitting their job, they're going to start making all this money. That is like the stupidest decision that you could ever make, because if you're not making sales while you are actively employed through your company or whatever organization you're working for, there's no switch that's going to get flipped and you're going to automatically start making sales after you quit, because that just means you suck at sales. I actually told that to one person one time and he got kind of offended because he reached out to me. He's like, hey man, I did real estate and it didn't work, and now I'm doing finances and it's not working. And he's like people this and whatever. And I was like, well, have you ever, I'm just throwing this out there, have you ever taken into consideration that maybe it's not the industry, it's you? Like maybe you're the one that sucks at sales? That conversation didn't necessarily last too long, but there's millionaires made in real estate. People are making millions of dollars selling real estate. People are making millions of dollars helping people with their finances, helping people with their taxes. So if there's people doing this and making a lot of money and you're not making a lot of money, it's probably because you're just not that good yet. But the key term there is yet. You're just not that good yet. it doesn't mean that you're not going to get good eventually. And so if you have a steady stream of income coming in from somewhere else, that allows you the time to learn the craft, get better, and then really be able to perform at a high level. And I know that, I mean, you know a lot about this, right? Because you used to work a W-2 job.
Yeah. I had a corporate job that I liked initially, and then over the 13-year career, I'm too much of an entrepreneur really to be an employee, and I like the freedom of working for myself. But when I was trying to transition from leaving that corporate job to the tax office that I'd purchased, it took 3 years of doing both jobs until I had I felt like I had the financial footing, to make that leap and go full time at the tax office. So I would never suggest somebody just ultimately quit their W-2 job and then go start a business, unless I say unless. I would keep the W-2 job until you knew that the self-employed opportunity was going to work out. But just keep that in mind, that it does take a lot of work doing both sometimes. And I think at this point I've probably had another too many peach crowns there, bro.
Peach crowns, yeah. This tequila, I bought the Rocks Terramana tequila because what's that thing that everybody's always trying not to consume? Is it GMO or what? Something like that, right?
HMO?
I don't know, but it's supposed to be like cleaner, and it's actually pretty good. But it is hitting pretty hard because I haven't been eating a whole lot. We have a couple of questions. So Joseph said, this is on my Facebook. Joseph said, let's get this party started. Joseph's probably already drunk like us. Angelica said facts. Joseph said overestimating initial revenue, ignoring market. Oh man, he went hard. He really wants to be a guest on this podcast. Yeah, he's going real hard. He said, Joseph Torres, by the way, he's the one in charge of creating LLCs and doing a lot of the estate planning for our company. And so we're definitely going to have him on here. But we want to have him on here as a guest because he just really has a lot of value to bring. So we want you guys to be real excited when we bring him on. So he said overestimating initial revenue, ignoring market research, neglecting legal and regulatory compliance, failing to plan for cash flow, trying to do everything alone. Man, this guy went pretty hard. Gotta appreciate that.
Yeah. Well, maybe because that first point would have been right up his alley with the way people structure things. And one thing that Joseph speaks a lot about is people not maintaining their LLC. So when people do have an LLC, there's some maintenance that goes into it every year, with an annual meeting. And some people think they just need to pay the annual renewal fee to the state and they're good. But there's a meeting that needs to happen. And a lot of people are like, well, I'm a single member LLC. It's just me. Who do I have a meeting with? And it sounds kind of silly, but you need to take the time and document. I always tell people, kind of do a recap of how the year went, jot some notes down, and then forecast, some things for 2024, a goal, goals and targets that the business wants to shoot for. And then personally, with the clients I work with, I'll have the annual meeting with them, and we can talk about what, the tax savings and strategies look like that we're going to implement, and then start planning for the year to come. But it's important because that's one of the main things that an attorney is going to look for if you were to get sued, is if you're maintaining your minutes, if you do have those two separate bank accounts like we talked about, and you're only using the business one for business and the personal for personal. So that's two of the main things that attorney's going to look for in the event of a lawsuit.
And we're going to go ahead, Dwight.
I was going to say, good stuff, Joseph. Thank you.
Yeah, man. Good stuff. we're gonna cover that, potential lawsuits against your business and all that stuff. We'll cover that in a future podcast. Angelica is asking, can we use credit cards exclusively for business? And I mean, the answer to that is yes, as long as that credit card, even if it's in your personal name, if that's the credit card that you're going to utilize for your business, then use that for your business. A lot of the times when you open an LLC, the first thing that you're going to get in the mail, depending on what address you put for the LLC, you're going to start getting solicitations for credit cards all over the place. Take advantage of every single one of them, because when you open an LLC, you're having to start. It's like a brand new 18-year-old that's just applying for credit. So you have to start somewhere. Just start applying for those credit cards, and use the $200 or $300 credit limit. Max it out, pay it out every month so you don't get charged interest, and do it again the next month and the next month and the next month until you start building your LLC credit. But that's very important. And there's some other things that you can do there that I'll show you in one of the other podcasts to really grow and stimulate the credit for your business or your LLC. Cool, man. So the next one, we were talking about not saving money to pay the taxes. And that's a big one too, because you have to understand, if your business is already making money, you're gonna have to pay taxes unless you work with us, in which case we're very good at figuring out legal ways for you not to pay any taxes. But assuming that we're not there yet, because you need a good amount of capital to figure out strategies to not pay taxes, you're gonna have to pay the tax man. And so, like, if your business made $30,000 or $40,000 for the year, assuming, like, let's just say a 22% tax bracket, there's a few $1,000s there that you're going to have to pay in taxes. And there's nothing wrong with that initially. Eventually, the goal is for you to pay no taxes, but it's a process to get there. What's your take on that, Dwight?
Yeah, so I think part of the problem stems from, as a W-2 employee, you just get used to your employer taking the taxes out for you. And then you got to file the tax return, and you just give the tax person your W-2, and taxes have already been withheld. So then when you're starting your business and you start to make some money, you forget to set some money aside to pay the taxes. And then it's kind of a combination of, you're not keeping up with your books either. So you really don't know what your profit looks like. So you don't know then how much to withhold for taxes. And so it's kind of a snowball effect. One thing leads to another. And, if you were keeping up with your books, then you could probably keep an eye on how much profit you have and have an idea at least of what your taxes are going to look like. But, we have a lot of people just in the regular tax preparation offices that I have, that decide, well, I'm going to go start driving for Uber or Lyft. And then they come in with their 1099s that they've gotten from Uber and find out, even though they were working their W-2 job, having taxes withheld, they still owe now, and they've never owed. They've always gotten a refund. But they've made all this money during the year with no taxes being taken out, and now it's time to pay up, and they just don't have the money to do it. And then they get on, some sort of repayment program, or with the IRS, and having to sit there and pay monthly payments to the IRS is kind of a pain. So it catches people off guard.
I'm glad that you're bringing that up, man, because I don't think that people fully understand the difference between getting paid via W-2. Oh shit, Willie's back. Willie, can you talk?
I hope so.
Okay, well, ladies and gentlemen, that's the end of our podcast today. Oh man, I was telling the people watching that you're probably the smartest tax person that I've ever spoken to. Yet when it comes to technology, it's very minimal understanding, but that's fine, man. As long as you understand the taxes and the finances, we don't give a shit if you turn on a computer.
The issue was when y'all could maybe hear me, I couldn't hear you at all, and then I could hear you, you couldn't hear me. So, but I think we're here now.
Well, the funny thing is that at the podcast last week, we were doing the test run. Like last week, we actually met pretty early because it was the first one and we didn't want to screw it up. And we met really early. And then William hopped on and his camera was under his desk. Like, I didn't even know how that worked. Like, I was like, how do you get a camera under your desk? But it was like literally under his desk. And it was just like, we didn't really understand what the hell was happening there. But we're happy to have you here, man. We are on dumb thing number 4, right, Dwight?
Yeah, dumb thing number 4, where people don't save money to pay the taxes.
Yep. And
when
so what I
they're
was gonna ask you, Dwight, and William, you can chime in on this. I don't think people truly understand the difference between getting paid via W-2 versus a 1099. So William, since you just hopped on and we want to give you some airtime here, can you give them that explanation? How do people even know if they get paid via W-2 or 1099?
Well, the best way to know is if you're invoicing for your services, but you're getting the whole amount. You're not having taxes withheld from the pay that you're doing. So that's a pretty good clue that you're getting paid your full hourly wage, or ever how you're billing the clients or customers you're working for, without any taxes being withheld. And we see that a lot, especially with new business owners, that they come in and they don't understand that they're going to pay self-employment taxes and federal taxes. And so they always assume that I've never had to pay this much in taxes, because this, prior to being a business owner, the Social Security, Medicare taxes were taken out of their check. And now they all of a sudden appear on the tax return with the federal taxes. So it's basically a lot of taxes that pile on. And if you haven't paid any during the year, it's several $1,000s at the end of the year. And you don't have to make a lot of money to be hit with a pretty big self-employed tax bill.
So when they're filling out the documents with XYZ organization, how would they know? I mean, aside from just asking, but assuming that they didn't ask because they didn't know. And I see this like a lot in like the medical industry, like PAs or nurse practitioners, they have the option to get paid via W-2 or 1099. By the way, I would always pick 1099. That's not a topic of conversation for this podcast. We'll talk about that later. But how would they know if they're getting paid one way or the other?
Okay, so most likely you have to fill out some tax form when you start. So if you fill out a W-9 form, that's the form for self-employed contractors. So that W-9 form asks for your federal ID number or your Social Security number, but that's a pretty good clue, because if the other form is a W-4 that you fill out if you're going to have taxes withheld from your pay. So the employees fill out W-4, contractors fill out a W-9 form.
That was the answer that I was looking for. So ladies and gentlemen, when you are applying for a job, if you are filling out a form W-9, that means that you are a 1099 subcontractor. It means you're a business owner. This is a really good thing. If you fill out, it was a W-4, right, William?
W-4, yes, for employees.
Okay, if you are filling out a W-4 form, it means that you are an employee. You're going to get screwed. I'm just kidding. It means that you are an employee, so you're not considered a business owner, and then we're going to have to talk about what we can do for you at that point. Awesome, very good. Okay, Dwight, I know that you sent me dumb thing number 5, but I really don't know what that means. So you take this one.
Well, dumb thing number 5, a lot of business owners, including myself, are guilty of, where we basically buy ourselves a job and we're not truly a business owner. And, you know, when you're starting a business, you're kind of doing everything because you don't really have the capital to bring employees on. So I get it. I understand. But as soon as you get some capital, your first investment should be in some staff, or at least a staff member, an employee that can come alongside that you can help train, to delegate tasks to, and free up your time. I know when I bought the tax office, I had some employees at the time because I had my other full-time job, but I was going there at night, closing the office, and to save money on payroll. I didn't have anybody else there. I was just trying to save money, because I needed the money to go back into the business to pay rent, pay utilities and all that good stuff. So just be careful when you are starting a business that you can have enough income, have enough revenue to start hiring employees and build a team. You got to have a team around you where you can step back then and focus on the business, because when you're involved in the day-to-day, you can't really run the business effectively. So quit buying yourself a job. And well, I take that back. If you do buy yourself a job, then you need to hire somebody that can run the business for you.
And that doesn't need to be yourself, right, Dwight? I mean, you need to have enough income. I think one of the mistakes that people make when they're going from employment to starting a business is they take that hourly wage that they were making in the job, and a lot of times I will see them bill that out to their new clients and customers. So if they were making $25 an hour, they go and they bid these jobs at $25 an hour instead of understanding that there's an overhead charge and a tax charge and supplies. There's just a lot of charges that your hourly rate now needs to include. So if you want them to make $25 an hour, you're probably going to have to charge somewhere above 60, 70, maybe $100 an hour to cover those costs. And so a lot of times the reason a business owner can't afford the staff that you're talking about that really help them get off the ground is they're simply just not charging enough for the services that they're performing.
Well, and we'll tackle the charging enough on another podcast, but that's extremely important. Like I'll give you guys an example with the firm that we work with. I mean, to work with us on an annual basis, it's 24 grand. That's what we charge, right? And then on top of that is whatever else that we have to do. That's to get the full tax service. But it's really a no-brainer because if we save you $300,000 in taxes, $24,000 is an afterthought. But most CPA firms and financial firms don't work that way, and so they charge $1,000, $1,500, and it's really difficult for them to fulfill when the margins are so low. But for those of you guys that haven't started a business yet, I will tell you this: initially, you're going to be everything. Initially, you're going to be the janitor, you're going to be the bookkeeper, you're going to be the secretary, you're going to be the salesman. You are going to be everything to that business because that's the only way you're going to be able to make money. That as you start to scale that business, as you start to make more money, it's very, very important that you start taking some of that revenue and, like Dwight and William mentioned, start to reallocate it to freeing up more time so you could do more things. And I think a lot of the times that's what limits a lot of business owners from having exponential growth. Alex Hermozzi, which is probably, I mean, the smartest dude that I have ever listened to, he said this. He said, if and my daughter's here, guys, so she's about to hop on the video. He said, you know, if you make like $350,000 a year, like that's what you make, but you have to spend all of this time operating the business. But assuming that you could hire someone for $150,000, and now you don't have to be involved in your business at all, and now you just make $200,000 just overseeing the business, but not actually having to put any time into it. Which one of those two deals would be more beneficial to you? I would say I would rather make $200,000 and not do anything than make the full $350,000 and have to actively show up to my business every single day. I don't know what's y'all's take on that.
Yeah, I would definitely agree with that because your time is key, and leverage. You're leveraging then somebody else's time, and that would give you the freedom then to take that money and invest it, maybe start another business, you know, and then leverage somebody else's time. So I think that's very important for people to think about leverage and using other people's time. And I don't know, maybe it's because I'm old and I'm running out of time. I had a conversation with my daughter about that the other day and some stuff she was doing that I thought was wasting time. And I was like, man, you're going to look back and just wish you had this time back.
Right.
And she didn't get it, of course. And so yeah, just I would much rather take less money and be less involved, because at that point it's passive, and that's the key, is to be passive with it and still make money. What do you think, William?
Yeah, I think that has to be one of the goals when you're leaving employment and starting a business, is that you should focus on making money, but also freeing up your time. I mean, otherwise, why leave employment if you're just going to be essentially fulfilling a job, all the time. So part of that business is providing leadership, vision, and helping grow that business. And so the way you do that is by employing others to come in there and essentially try to replace you. So one way I try to look at it in my business is the task that I'm doing, is there someone else in the business that can do it just as good or better than I'm doing it? And is that the best use of my time? So one of the things as a business owner that we need is more sales and client relationships. So that's one thing that maybe only the owner can work on, and that's what the owner should be doing, is producing revenue for the business. But all these other tasks that's tying you up, and let's say like if your billing rate, as a CPA is $250 an hour, well, then any task that doesn't produce that type of revenue needs to be delegated to someone else. And they may not do it as good as what we would do, but if it's adequate enough and it starts to free up your time. And the hard thing is training someone. You feel like, man, I could have done that and it would already be over with. But what you're doing is you're training them for future time. So it may take you a little bit of time in the beginning to train someone to do it, but they will pick up on it and it will start to free up your overall time. And that is where, we try to use the term duplication in business. That's how you can double and grow the business is by delegating those tasks to other people in the business. And a lot of times they'll get them done because the owner sometimes is the bottleneck in the business. So you're actually holding your business back. And we started achieving growth when I decided to start hiring more people. And so even though initially we were losing some of the bottom line revenue, the business ultimately grew by having employees take on tasks that I was doing personally.
Well, and that's a good point, because when I left my corporate job and was able to go to the tax office full time, my wife questioned why I had employees. She's like, well, you don't have a job anymore, and she expected me to be at the tax office saving money and not paying other people. But that's been 7 years ago. So at this point, that was like you said, I kind of took a step back and I made an investment in trying to build a team to where now I'm not in the tax office very often. And somebody asked me Sunday at church, they're like, well, are you busy or are you worn down already? And I'm like, I feel great. The people in the office might be tired, but I'm doing awesome. I mean, this has been a great tax season. So, you got to keep that in mind, and you are making an investment for the future that ultimately is going to free up your time to do other things with. And it's about freedom.
Right.
It's funny that you guys say that, because I spoke to a lady today. We were breaking down her finances. Her net worth is roughly around $4 million, and she has all this money. Most of it, she has it sitting in savings accounts. And we were having this conversation because she really wants some guidance as far as where to take some of this capital and deploy it to make more money and stuff like that. But she said this, and I mean, I already knew this, but it's just, it's good to hear other people say it. And she said, I'm really just trying to buy my freedom. And really the whole point of making more money, ladies and gentlemen, the whole point of starting a business is because you want to buy freedom. You want to get to a point where you can control your time and you can be very diligent with the things that you want to do or not do. It's not about the money. The money's just a resource. The money's just a tool. It's like a car. It's like a computer. Everybody always says that loving money is evil. We're not here to love money. We're just here to see money as it is. It's just a resource, like everything else. And once you understand that, then it's a lot easier for you to deploy it into different things to be able to make life easier for you so that you can buy yourself more freedom.
I think you summed it up very well there.
I'm pausing because you asshole said I talk too much on the first one. I'm giving you guys an opportunity. So that's why I'm putting these pauses. Don't all of y'all go jumping in at once.
But ultimately, when you start your own business, you are the one that's in control of the outcome of how that goes. And so, you could sit here and do all the work, but the thing is there's only so many hours in the day And so you have to keep that in mind that you will eventually cap out. So the only way to grow is you've got to have a team. And the people that do develop a team and put time into that development ultimately are going to be the businesses that are going to win in whatever niche that you're in. So you can see that. I a lot of times have to advise, especially new business owners, that they're getting into the business, and it's a tough call to say you need to hire some more help because they feel like they're going to lose money by doing that. But it's only a short-term thing. That's the thing you got to remember is you may give up a little bit of revenue short term, but the benefits of having a team is going to far outweigh that. Even the fact that we have time during tax season to do this podcast and we're not stressed out because we do have a team supporting us getting work done day to day at the offices, and we can focus on bigger things and growing the business.
I like it, man. Smart words from a smart man that can't turn on a computer, but he can definitely do your taxes at a very high level, which is good. Dwight, so let's do the recap. The 5 dumbest things that people do when starting a business. Go.
All right. So number one is they just set up things very complicated from the beginning. They overwhelm. They'll set up holding companies in Wyoming, but ultimately you need to make money. So focus on making money is step one. The second thing was they don't have a separate bank account for the business. So they're running everything through one bank account, their personal account. So you need to have a second bank account for the business, and don't commingle the funds. The second one the third one was they don't keep their books during the year. So they wait till tax time, or they wait till the end of the year to start doing their bookkeeping. And at that point, it's very stressful. Also, they may not have kept up with all the expenses. So they're increasing their taxes at that point because they haven't been able to document what they spent money on. Number 4 is they're used to being a W-2 employee where all the taxes are taken out for them, but now they're self-employed and they're making money that hasn't been taxed. So they don't save any money to pay those taxes. And sometimes they run into challenges, trying to pay those taxes. And the 5th one, which I think we spent most of the time on, which was a good one, is about, when you start a business, typically you're buying yourself a job, and it shouldn't be that way. You should try to be the business owner, try to get to a point where you're hiring staff that can shoulder a lot of the burden, and then you can oversee things and manage the business and, leverage their time, which gives you more freedom to do things that you want. Because, people talk about, well, what I'm doing at my job, I hate it. I want to work for myself. And then they quit and they start this business and they're like, well, this sucks. I don't have a guaranteed paycheck anymore. I've got to hustle. All these bills coming due. And basically they've bought them a job. They're having to do everything. Like you mentioned, clean the toilets, from marketing, bookkeeping, sales. So as soon as you have the revenue, you need to be able to hire some staff and start delegating, train a good team, and that'll help you shoulder a lot of the burden. But your team should always be an investment. If you view your staff or your team as an expense, you have the wrong people on your team. So you need to find people that you can pour into and that are investments, and you're getting a return on what they're bringing to the table.
Agreed.
That's it. Yeah. Hopefully that was a good recap.
That was great, man. William?
I was just going to say, we get a lot of calls at the firm for people, and they don't necessarily ask how good you are, what you can do for me. They ask, number one question I get asked all the time, are you taking on new clients? And that kind of struck me, like, why would you ask that? Like, you would always want to take on as many clients. But what's happened and what I found out, especially in our profession, is a lot of the sole practitioners that do taxes and bookkeeping work and all that, they are the ones doing the work. And so some of them have decided they're not going to take on any more clients because they can't take on any more clients. And so that's why we're getting these calls about, are you taking on any more clients? So I would just put that out there. We've learned how to build teams. We have a great team. We have all kind of different staff on our team to help fulfill on taxes and bookkeeping and tax advisory and all that. So yes, we will always be taking on more clients, because the more clients we have, the bigger our team gets. And ultimately we get the resources that we need as a firm and an individual. So yeah, so if anybody out there is listening to this, you can contact any of us. We're taking on new clients and don't plan to stop that anytime soon.
Unless you're somewhat of a douche, in which case we probably don't want to work with you.
But nobody watching this would be. So
No, everybody's watching this show. It's just absolutely great.
I just told somebody to fall off, so they may be a douche. I don't know.
I don't know. Maybe, perhaps. It's a great thing when you reach a level where you can be. You can segregate the business that you choose to take, and that is definitely a blessing, and that's ultimately the goal that everybody wants to reach, is where you're not having to beg people for business. You're just so good at what you do that just the business just comes, and that's a blessing. But you have to put in the hours, and you have to get really good. So just to piggyback on what you guys said. I think ultimately, because I know there's going to be a lot of people that watch this podcast that are wanting to start a business, understand that you have to earn the right to work less. You're not going to be able to do that from the get-go. So if you're getting into business because you think that miraculously you're going to be able to work very little and make a lot of money, that is not going to happen. You are in for a rude awakening. When you get into business, you're going to work so much harder than you ever did at a regular job, because that's your baby and you're trying to grow it and you're trying to make it better. But eventually, and it'll take some time, it could take many years, it could take 5 years, it could take 10 years. Eventually there's going to come a time where you're going to be like, man, I'm making a lot of money and I don't have to work as hard, and that's okay. But you have to earn that right. It's a process, and you have to get there.
Yeah, that's a good point. I work more now than I did at my corporate job. And one thing that always made me mad at my corporate job was I try not to work past noon on Friday, one at the most. But now, on Friday, I'm working just like any other day till 9, 10 o'clock at night. My day started at 5 a.m. this morning. I'm still, it's almost 8:30. So I'm still hustling, still working. So it never turns off.
Yeah, that's a good point, Dwight, too, is that we can sit here and, like I said, we can talk about our team, and we do have good teams working for us, but the responsibility for the business things, it's always on our mind. And you never do get to just leave the business like you would like an employee. 5 o'clock on a Friday afternoon, they're going off for the weekend and they'll worry about it come Monday morning, but there's still stuff that we're thinking about constantly. And that's a tough thing too, because you want to turn it off sometimes, but it's very difficult once you do have the business that you're running.
So I do have a bonus round, and I wanted to throw this one in there before we wrap up, because it's almost that time. We're almost on the 1 hour mark. If the business that you're wanting to get into involves you having to recruit 5 people, and those 5 people recruit another 5 people, and those 5 people recruit another 5 people, and in 3 months you're going to be a millionaire, probably high probability it's not going to pan out well for you. High probability. And the reason that is, ladies and gentlemen, is because there's something called a barrier of entry. A barrier of entry is something in place of whatever business you're wanting to get yourself into to keep stupid people out. That's what a barrier of entry is. That could be a monetary investment. So that's why real estate investors, there's a lot of real estate investors, but most of the real estate investors out there, they have money. So what's the barrier of entry to get into real estate? You have to have capital. You have to have money. If we look at life insurance agents, if we look at financial planners, we look at financial advisors, that's what I do. there's a barrier of entry. There's exams, there's certifications that you have to take to be able to get into that industry. If you look at CPAs, if you look at tax planners, if you look at, did I say, I don't know if I said real estate agents, but all of that has a barrier of entry. There's something in place, either an exam or a monetary contribution, that keeps a lot of people out. That's the business that you want. You don't want the business where you contribute $150 into some sort of annual membership and all of a sudden you have a business and you expect for that to be successful. It's going to be very, very difficult, because that is a very saturated market. It's a market where there's a lot of people in it competing for the same client, and it's difficult. And then if they send you on this wild goose chase to start tracking people down and recruiting people, it can get a little frustrating. I'll shut up, gentlemen. Your take?
No, that's good stuff, and I'm glad you added the bonus round in there, because usually there is a monetary form of entry, and a lot of times in those, basically referring to multi-level marketing type deals, that entry fee is the way those people are making the money, not by fulfilling or not by selling whatever the product is. They're just making money recruiting new people, and they basically just sell a false sense of hope that you're going to be successful. So steer clear of stuff like that.
Yeah, so that's the thing, is that you don't get into business to get rich quick right off the bat. You're going to take some time to develop your skills, and also to pay the price a little bit. Like you're talking about, you're going to work hard early on in your career, part of whatever business you're in, and you want to do that. If there's education you've got to get, all the better for that, because then you really start to get paid off of the skill level that you bring, and then that's ultimately where the wealth is created. Because we've been at this for a number of years now, perfecting our craft, and I feel like we're getting better, but there's still a lot that we learn every day, even after doing this for 15, 20 years. So, thinking that you're going to get rich quick by selling some product that only can get sold through those channels is a good way to really get disappointed and lose a good bit of money, because usually the people buying into that stuff either really can't afford it, so they're sold a dream, or like you said, Dwight, the ones at the top, they've already got the pyramid built, so they're making money off of everybody coming in, even if you don't stay for long. It's just the fact that you signed up. So yes, do people make money in that? Yes, they do, but it's not money for everyone in there like they make it out to be.
Agreed, man. Good stuff. All right. Which one of you two lovely gentlemen would like to close this out?
Go ahead, William, since you joined us midway through. Recap us.
Yeah, and I hated that I missed it, because once I saw your list, I had a lot to say. So we'll try to get it here in a couple of minutes. But the commingling of the funds in business, man, that's a real thing that people don't understand. They think that they're going to start a business and come in here at tax time and just throw a bunch of receipts down, and here's a bank statement over here where I've got some stuff that I need to write off. Here's some other things. I mean, it's just a mess, and it adds stress to the taxpayer client. It adds stress to the preparer. But we have started, whenever I see that, I will provide some coaching to the client, but I will make them go back home and do better, and then they can bring it back once it's in a little bit better order. But we used to have to just deal with that because we were taking, any type of client. But that was the biggest thing, is that the self-employed taxpayers would come in with just all kind of stuff, and they didn't know what they had done, how much money they had made, or anything. And so it's kind of hard to know if your taxes are right if you don't even know what the right answer is supposed to be. So that commingling is a very big thing. The other thing you talked about was making things complicated when you don't need to be. Like you're talking about, people set up these holding companies and try to get in these other states because they're scared of being sued, but you don't have anything to lose until you make some money. And so even if you get sued and you don't have any assets, what are they going to get from you anyway? But another point to make is on just because you put an LLC in the state of Wyoming, whatever state you're doing business in, you've still got to register in that state. So why pay registration fees in two different states when you're just getting started out in business? Just because you heard on the internet somewhere that you need to protect assets that you don't even have currently yet. So yeah, those are two big takeaways. Yeah, when you start out in business, you just need to be making some sales and generating revenue. And then at that point, you can start worrying about everything else. Because we start out, we basically want a small business owner, somebody getting started out, we want to see them make $50,000 to $100,000. That's kind of a baseline income before we can really start working with them on a high level anyway. So what I've tried to do with new business owners that come in, you can't sell a $24,000 package to a business owner that's only making $50,000 a year. So we try to provide a little bit of coaching on marketing and sales. I think that's where the investment needs to be made when you're starting out in a business, is learning how to market that business. And so a lot of businesses don't even market their business very well. So if you can learn how to market your business, you'll succeed in business. You'll be very surprised at the volume of clients and customers that will come in. And another thing is just doing what you said you were going to do for a customer or client, showing up, and just being dependable is a great way to grow your business. So with that, guys, we'll just say cheers to wealth. Another great episode this week, and look forward to continuing to talk to the audience and in the weeks to come as well.
Very
Cheers.
good, man. Cheers, ladies and gentlemen. We will see you guys next week. Good job, little Willie.